Congratulations! You're officially invited to the Self-Employed Tax Credit Program Advanced Funding option. You've already completed all the key requirements to qualify, such as completing your application, and help us verify that you don't owe any money to the IRS. In this video, we're going to cover all the basics of the advanced option to make sure everything makes sense to you, and ensure you understand the loan documents contained in this invitation. Yes, fundamentally the advance is a loan, and this is a loan collateralized by your check from the IRS. That means it's important to understand that a great deal of the messaging of the loan documents that you've received are just required by law, specifically the Truth in Lending Act, otherwise known as TILA. The Truth in Lending Act is a federal law that was enacted in 1968 to help protect consumers in their dealings with lenders and creditors. Before the TILA, lenders would use a variety of complicated terminology and forms of lending that manipulated uninformed borrowers. The TILA changed this by requiring a uniform system of disclosures and terminology to be used for lending, like credit cards or mortgages. We are very excited that our lending partners, led by Carter Federal Credit Union, are providing a 100% advance of your S.E.T.C. base credit and are not requiring any monthly payments while you're waiting on the IRS to process your claim. Even so, loans are required to have specific terms. So in this case, the duration is 9 months, or when the IRS check reaches the program's treasury services and then is immediately paid off. Curious what your take-home will look like after Anchor's fees and the fees involved with advance funding? Let's go through a hypothetical example together. Let's say you're using a $10,000 S.E.T.C. advance. 80% goes to you, the borrower, and 20% to Anchor. Not only is the 20% given to Anchor used to cover the fees for processing your credit, but they're also covering other fees on your behalf, such as fees for treasury services with Carter Federal Credit Union. Let's say the IRS finally issues your check after 20 weeks. This check includes the $10,000 of calculated credit and interest that the IRS owes you equal to about 20 to 23% of that base credit amount. Yes! In case you were unaware, the IRS owes you interest, and not just from when you started your S.E.T.C. claim, but all the way back to the year of the return you are amending. This interest is greatly assisting you with the fees involved with processing your claim and your advance loan. Since interest is accumulating in the background, meaning you're not making any monthly payments, the term is called a balloon, meaning the interest is paid at the time that the loan is being paid off. So, the check pays off the original $10,000 to the loan. And since it took 20 weeks for the check to get there since you were issued the loan, or 140 days, we can now calculate what interest is actually due for the loan. Remember, because of TILA, the interest amount they show you is what would be due after the 9-month loan term, not 140 days. With this new calculation, the amount of interest owed to the lender in this scenario is $690. This means that the borrower in this example will get a second check for $910. For a total payout of $8,910 out of the original $10,000. Pretty great, right? Anchor's fees to complete the work are the same for either option, and are due regardless of whether or not you decide to take the advance. Given the low cost of the advance, this makes accessing your funds today easy and pain-free. We hope this helped provide you some clarity on the process and fees surrounding advance funding, which is really a game changer for self-employed applicants like yourself who are counting on these credit funds and just can't wait for the IRS's lengthy processing times. We take great pride and pleasure in serving the dedicated professionals that kept our economy alive through the events of COVID-19. If you have any follow-up questions, please don't hesitate to reach out to our team. Otherwise, we look forward to seeing you receive your much-deserved credit funds.